Hi, Stephen. What is your view in terms of recession, and how will it impact the healthcare investment strategy?
We do not anticipate high probability for a U.S. recession in the near term, given persistently low unemployment and stabilizing inflation. We are, however, more closely watching recessionary pressures in Europe currently, given growth challenges being seen in Germany, United Kingdom, as well as France at the present time. We do expect these pressures will continue to be mitigated to some extent by continued strong growth in Asian and emerging markets. That said, healthcare products and services continue to exhibit very high inelasticity of demand, and accordingly, we would expect our healthcare investments to outperform the broader markets in such a scenario. U.S. recessionary risks bear monitoring, however.
Can you name 3 key factors impacting the U.S. healthcare sector in 2025, and how can the strategy manage them?
3 key factors we're tracking that impact the U.S. health insurers and services subsector in 2025 include, number 1, expanded ACA or Obamacare insurance premiums. Those premiums are an artifact of the pandemic relief spending, and they are scheduled to sunset year-end 2025. We would expect considerable jockeying here should President Trump return to office, with a continuation of the ACA subsidies likely contingent upon a horse trade vis-a-vis federal tax cuts that Trump had implemented in his first term, which also expire in 2025. If they were unable to extend these ACA premium supports, there would be a disproportionate impact on certain managed care organizations and hospital systems that are over-indexed to these premium supports. Secondly, meaningful changes to the Medicare drug coverage have begun here in calendar 2024, and they will likely continue next year. Largely unappreciated by the street and investors, we are expecting elevated demand for more advanced, i.e. branded and specialty drugs, as Medicare beneficiaries' out-of-pocket limits drop this year to $3,800 per annum, and next year will drop down to $2,000 per annum. There will be a disproportionate impact of this higher spend on Medicare Advantage plans and their cost structures going forward. The third and finally, we may see potentially more focus on U.S. federal budget deficits, particularly if President Trump returns to office, given his broad commentary from his campaign, in particular Elon Musk, talking about curtailing government spending. It is unclear what those implications might be on our public health programs in the United States, such as Medicare, Medicaid, and Social Security, over the longer horizon. We intend and will follow those developments, however, very closely.
Thank you, Stephen. Could you share how our healthcare strategy can capture these opportunities in 2025?
In conclusion, our outlook for 2025 is continued growth in the healthcare space, continued successful implementation of our healthcare strategy grounded in our 3 guiding principles. We continue to find interesting companies at reasonable valuations that populate this portfolio, and expect another year of hopeful upside to broader markets as well as to our healthcare benchmark.